all eyes are Greece, Greece and Greece.
Yeah.
Does anything else matter at the moment?
Yeah, well, it's quite, as much as everybody's sick of talking about Greece, it's fairly unavoidable. It's in the kind of the first two kind of things we're looking at in the slides today. You can see where it's just spilling over everywhere within Europe. Like you look at German consumer confidence numbers that came out today. We had that GfK. If we can't go on the first slide, we had that GfK consumer confidence survey looking at German consumers. And these kind of the survey came back, and it was showing weaker numbers, and seeing from German consumers that they're cautious because they're worried about the effects of Greece. And while kind of Greece may not actually impact on Germany that much, but what's happening in Greece doesn't really affect German consumers. But it does matter to their sentiment. If people are thinking, we may be in tricky times ahead, even if Germany is reasonably isolated from what's happening in Greece, and even if the German consumer is many steps further isolated, down the food chain from anything happening there, that perception is going to knock on. That's when you start to get problems, is when people start to defer things. And also, you got this second bullet point looking at so this morning the SNB chairman, the Swiss National Bank chairman, Thomas Jordan spoke. And I feel like there's a risk here that people have let what's happening, let the Swiss franc out of their minds a bit. And I've kind of done this in the past. And the Swiss franc comes back to bite people, as we've seen this year. A lot of people watching this show will have had a lot of pain earlier this year. They had that pretty nasty shock. There's nothing to stop it from happening again. If they bring that floor in again, you look at Euro Swiss has moved to 13%. Swiss francs appreciated 13% against the euro. That's going to start to hurt Switzerland. And you remember the last time they brought that floor in was in 2011 because of exactly what's happening at the moment. Because we had so much kind of nervousness in Europe, because we had so much kind of fear over Greece. People started parking cash in Swiss francs to try and, as a kind of haven currency. If we start to really see that again, if we see Greece default, that's going to smash that Swiss franc back up again. 13% is a fair amount of appreciation for a country that does the majority of its trading with Europe and with euro-denominated customers. So if we see any real shocks happen from Greece, you should watch out for Thomas Jordan coming in and putting in some fairly drastic measures. He's already proposed negative interest rates to try and ward off some of that capital appreciation happening there, but I think that's something to look out for.
Understood. Finally, CBI distributive trade surveys.
Yeah, I mean, British consumers aren't spending as much as retailers may have hoped, but of course they're never going to spend as much as retailers would hope.
Yep.
It was slightly weaker than expected, but I think this summer is going to be a good summer for retailers.
Is that down to the weather predominantly?
Well, I think it's down to inflation. It's down to increased discretionary spending power. We've got this great low inflation. As Mark Carney keeps telling people, take advantage of this where you can.
Yeah.
We've had wage upside. We've finally had real wage increases where in the past we've had some upside, but it's been stripped out by inflation. We're at that point now where we have genuine real wage hikes. People are feeling richer each month.
Right.
I think we're going to have a good, that's going to be then passed through to retail spending.
Understood.